This is the Friday, December 20th, 2019 version of the Market Plus segment. Joining us once again is Jeff French. Jeff, welcome back to the table.
Thanks for having me.
Jeff, we've got, like I said earlier, we've got Christmas next week. We've got a lightened holiday trading session. What are you looking forward to here, commodities or otherwise, for the Christmas season?
Well, I mean, we're going to have reduced volumes. I mean, it started here this week, but we are starting to see an uptrend. We took out some highs here that we haven't seen in months in the wheat market. We had some big export sales in the wheat market, 6-year highs that we haven't seen for a long time. So I don't know, it feels like the times are changing a little bit. We do still have plenty of old crop supplies around here, but the one big question that I want to get through this holiday season and get to the January 10th final production report, so we can actually see how big, how small the 2019 crop was. And it might continue because there's still a lot of corn up there in the north that's still standing in the field.
Jeff, when you look at the 2020 year, it's been noted by some analysts and forecasters that perhaps we're beginning here into an up cycle instead of a down cycle that we've seen here for about 5 years. Do you think that that's the case, that times are really changing in that aspect? We're due. I mean, if you look at cycles, bear cycles, bull cycles, average 5 to 7 years. So yeah, we are entering the the 5th year, 6th year of this down cycle, and it can change quickly. Obviously, the weather will be the #1 factor, but these trade deals that we've had, I mean, these were huge barriers that was blocking demand for our commodities. So getting those out of the way and getting them signed into law could definitely start an uptrend, and it could be a game changer here moving forward. Are we starting to see an uptrend in the cotton markets?
Yeah, absolutely. I mean, we've been on a 3-month rally here up to 5-6 month highs. You had the funds, they were pressing the short side. They wanted to see the prices go lower with no Chinese demand, no trade deal. Well, now the prospects of that is a lot more favorable. But also you had some dryness down in Texas. West Texas cotton crop was really rough. And then there's an expectation here going into 2020 that cotton could lose up to 2 million acres. So we need the demand. Hopefully we see that here with the Chinese trade deal. We're right up against resistance, but you look at May cotton taking out 70 cents, we could easily run that market up to 74, 76 cents really quick.
Jeff, since you brought up the acreage discussion, we've got a question in this week talking about acreage, which seems crazy because we're still in 2019 here, but we've got a question here from Bradley in Upland, Nebraska, and I'm going to add on to just a little bit of his question here. But he said, could the struggling wheat acres planted, not sprouted in Kansas become corn acres next year? And I want to add to that, if we do lose 2 million acres of cotton, what commodity is that going to replace with?
Time will tell. First part of the question, if it's planted in wheat, I don't see them going in and planting anything, digging that up, repairing it. I think the wheat that's planted in Kansas, a lot of that ground is most suitable to grow wheat. And we are at an estimated 110-year low acres that's going to be planted for 2020. So from that standpoint, it is fundamentally bullish. But we need to see demand, and demand here lately has been lackluster at best. So we'll just have to see what happens here going forward.
And what about the cotton acres that you said could see 2 million acres switch over?
I think time will tell on that. I think this spring has a potential to be a great acreage battle because if we do get the Chinese trade deal and we do see the Chinese demand, they actually follow through with the deal, the beans are going to make, in my opinion, a major run. And, the baseline projections right now are 94, 95 million acres of corn. I think the beans will have something to say about that if the Chinese come up and start buying the beans.
And beans seem to be favored by everybody to be the real winner here in the U.S.-China trade deal. I was looking at some results here from JCI, China's top private exporter, looking at, okay, what's going to be part of that $40 billion ag products or ag package. And we've got a question here from Matt in North Dakota wanting to know, do you believe the trade deal will give China the confidence to buy our products? And will they purchase U.S. beef again closer to the pre-2003 levels?
That's going to be hard to say because, I believe China right now is buying U.S. beef. They are bringing it in through Hong Kong. If you look at the weekly exports, you see Hong Kong on there. Now, it's not on a big level, but they are buying it. But the one thing you have to remember about China beef demand and China meat demand it's all hormone free. They have a very strict policy on hormones, and that takes a lot of our cattle out of that market. But then if you look at our all natural cattle here, when you compare it to our competition, the Brazilian cattle are still about 40% cheaper. So I think it will be, the spillover buying that we could potentially see in the pork will definitely spill over into the beef market. But Chinese directly buying from U.S. beef, we'll have to see.
Okay. Jeff, we've got another question here from Tim in Crookston, Minnesota. What would disrupt corn and soybean export projections for 2020?
Well, what export inspect? Yeah, I mean, the Chinese trade deal would be the biggest thing, but also a disruption in production. If we have less production, that's going to cut into the exports. But also the U.S. dollar. If it continues to move at historic high prices up here, that will make all of our commodities more expensive. So that will be the number one thing I think moving forward: the trade deal and the U.S. dollar.
Jeff,
on the exports.
Tell me a little bit more about the U.S. dollar and where that currently sits and how that's impacting our exports.
Well, it's been near all-time highs here for a while. It's been very strong, and that's more of a security issue. I mean, if you're going to hold dollars, I mean, ours is the strongest in the world. But it had a big correction because the Chinese trade deal, that will make the Chinese dollar a lot stronger, and we saw that a big correction. So, maybe that's the start of something, but that will be a big determining factor for our exports.
Jeff, we've got just one final question here for you, coming to us from Jamie in Spencer, Iowa. How long will the ride continue up in prices?
Well, I mean, that's something that we'll just have to see. But, it's one of those things where if we are going to be breaking out of the downtrend here, and it's been a long downtrend, these trade deals, I mean, if they are implemented correctly and followed through, I think it could be an absolute game changer here moving forward. So hopefully, 2020 is a great start to it.
And Jeff, this is just a question I have to end things. Besides the trade deal with China and besides the January 10th WASDE report, what are the other big fundamental factors that you're watching here in 2020?
Well, it's going to be the weather. I mean, we are wet. We went into this winter extremely wet. So we'll have to see how spring develops because, to get 95 million acres of corn in the ground, we're going to have an early spring and a dry spring. So right now, it doesn't look that way, but we'll just have to see. But it's definitely going to be the weather and mainly the wetness that we've seen.
All right. Jeff French, thank you so much. Always a pleasure.
Thanks for having me.
Join us next week when we'll explore how a hemp green rush could make or break prospective farmers. And Tom Fitzenmeyer is back at the Market to Market table. Until then, thanks for watching, listening, or reading. I'm Delaney Howell. Have a great week.